Guys, I have some really bad news, and I'm not sure how to share it with you, but the stock market right now is completely drunk. The stock market is completely drunk. I've not seen it this wasted in many, many years, and I'm going to share with you guys some statistics today. I'm going to show you some statistics that will kind of show how drunk this stock market really is right now. And then I'm going to explain to you guys, you might think like a lot of big fund managers and a lot of, let's say, Wall Street investment banks and things are hating the way this market is right now. They're just getting killed and they're not making any money and they hate it. And really that couldn't be further from the truth. So I'm going to explain that to you toward the end of the video and exactly how they're making so much money. So why the market is blowing off what has been a really good earnings season. I mean, earnings have been really strong. Let's look at some of the statistics behind that. Corporate profits are tracking at more than 18% higher, but stock market averages are little changed since the start of earnings season. Net profit margins are tracking at 11.1%, which would be the highest level since the third quarter of 2008, guys. 2008, okay? That's a long time ago. Companies that have been beating earnings have only seen share price gains of 0.1% in the 2 days after reporting, compared with an average of 1.1%, which is typical increase in earnings season. So basically, companies that beat earnings aren't even going up to even remotely as close to as much as they usually do. It's dramatically less, 0.1% versus 1.1%. That's that's crazy there, guys. Corporate America is well on its way to have what could be a record-breaking profit season, and investors don't care. First quarter reports so far are turning one of the market's most honored truths on its head, that profits drive prices. Despite earnings growth of more than 18% and an 80% beat rate, meaning 80% of the companies that have reported numbers currently have beat numbers. Not just, made the numbers, not just met estimates, but actually beat earnings. 80% of companies have beat earnings. The market has little changed since the season has accelerated. This is true again Tuesday, when a slew of high-profile beats couldn't push the overall market much higher, as traders hammered even some companies that beat expectations. In fact, as trading progressed, major averages turned decidedly negative, even as nearly 3/4 of the 23 companies that reported topped Wall Street estimates. Unbelievable, guys. These companies are beating earnings, and their stocks aren't going up. Not only are their stocks not going up, but their stocks are actually going down, which is incredible, right? We see a huge, Goldman Sachs is a perfect example. Huge earnings beat last week, the huge earnings beat. Like, they were expected to do around $8.75 billion in revenue. They did over $10 billion. They were expected to do, somewhere around $5.50 of EPS. They did nearly $7, and the stock went down the next day. It's like that stock should have been up massively. It's like that for company after company right now. It is a quote from this guy, it is pretty amazing when you look at it. An earnings season that is having an equal and opposite reaction to results, said Art Hogan, chief marketing strategist at B. Riley FBR. It is really difficult market to please right now, he says. Dow components Caterpillar and Verizon posted earnings beats, were rewarded with solid price gains at the open before their shares pulled back from their highs. 3M's were in line, but saw its shares tumble the most in 9 years as it reduced guidance. Caterpillar tumbled on comments from its chief financial officer. Google Alphabet posted strong earnings beat after the close of the bell Monday, and it saw its shares slide on Tuesday. This is Google McDougal we're talking about, very big beat. Companies that have topped earnings estimates have seen share price gains of just 0.1% in the 2 days after reporting, well below the typical gains of 1.1% as tracked over the past 5 years, according to FactSheet. Earning misses have resulted in two-day declines of 0.9%, which is actually well below the typical 2.4% decline there. And we see here the markets obviously were down big today. 440 points in the Dow, 1.8%, S&P down 1.4%, NASDAQ down 1.7%. As far as my stocks went, they held up pretty decent today. Almost all my stocks, actually I think all my stocks were down less than whatever their index was actually down. L Brands and Eli were the ones that held really strong today. So the earnings are just a crazy earnings season right now. Companies are beating numbers. Like 80+% of companies have beat numbers. And so you would think the markets would be flying high and we'd be, going up to record highs again and surpassing that. And, these stocks would just be going up like crazy. And it's just not the way it is so far. Very few stocks that have reported unbelievable earnings, their stocks are up massively. Even Netflix, the golden child of Wall Street, okay? They had a massive beat. They beat by 2 million subscribers last week, right? And so I looked at Netflix stock thinking, Netflix must have been up huge for the week. Netflix was only up about 5% for the week. We're talking about the golden child of Wall Street, okay? Was only up about 5% on the total week, on a week when they came out and announced they beat subscriber numbers by 2 million, guys. That's how drunk the stock market is right now, where it's just like, it's not even paying attention to what the reality is. The reality is corporate earnings are unbelievable right now, okay? Results are unbelievable right now. The overall economy is very strong right now, but the market is just kind of brushing it off like, who cares right now? The market is drunk right now. That's what I like to call it. Now, let's talk about, you think, Wall Street would not be liking this and they're not making any money and blah, blah, blah. You would think all this, right? But the fact is Wall Street actually loves what's going on right now from two different perspectives, okay? The first one is from the investment bank's perspective, like a company I own, Goldman Sachs, right? That's a company that makes dramatically more money when there's a lot of volatility in the market. When people are trading like crazy, trading, all that trading out there, that produces a situation where they make so much more money, guys, than they usually would, okay? Not only is Goldman Sachs making a lot more money from trading, but then you got to think about it from the perspective of long-term, fund managers and whatnot that manage a lot of money. When they see all these prices declining on stocks they love, do you think they're really like, oh man, oh no, I can't make any money? No, the majority of them out there are buying shares for a cheaper price than they would have, a few months ago or something like that. So they're not looking at it like, oh my gosh, I need to make money every single day, especially the ones that have been around for a while. I'm talking about guys like Warren Buffett and people like that, right? These guys, do they really care if their stock's at this price, tomorrow or today or whatever? No, they just care that it's lower right now. They can buy even more shares. And 3, 4, 5, 6, 7, 8 years from now, they're going to be up massive on those positions. That's what they care about in the end, guys. So if you think they care about, all this little mumbo jumbo that's going on here in the short term, it's nothing for them. They're just going to, wait it out, keep buying shares for cheaper prices. And, several years from now, those shares are going to be much higher than they are. Everything will have been forgotten. And then there'll be some new thing that causes volatility in the short term. And it's rinse and repeat. It's the same thing over and over again. Rinse and repeat. This happens. And then, the big guys, they buy up all these shares for cheap prices, right? Several years later, they can sell them off for insane profits. And everybody's like, how the heck did they do it? It's that simple, guys. And, but the market's drunk right now. Who knows how long it will continue to be drunk? Maybe this carries into the second half of the year, or maybe the second half of the year, things kind of start to open up and, we start moving higher and whatnot. But for right now, it's just a volatile market. There's just lots of trading going on right now. And that's kind of the way it is. So we shall see how things progress throughout the year. But anyways, I would love to hear from you guys in that comment section. As always, let me know what your opinion is on this. I would love to hear from you guys. Any shares out there you guys are buying right now, selling right now, looking at anything like that, I would love to hear from you guys as always in that comment section. Thank you for watching and have a great day.